Taking a look at today's interest rate markets, let's look at the 10-year note futures as they're selling off slightly today. 10-year note futures did reach almost a 6-week closing high yesterday before backing off slightly today. Currently holding the 111 handle in that March future though. 111.06, down a couple of ticks on the day as we move towards that release tomorrow of the Nonfarm Payrolls. I think that's really why we're seeing the market hesitate a little bit today. But looking at other driving factors, weekly jobless claims this morning ticking slightly higher, but nothing outside of where they have been the last couple of months. And when you look at it from a historical perspective, near the lower end of the range. So I don't think they had too much of an impact, but maybe a slight short-term sentiment shift. Couple that with Fedspeak, it probably maybe a little bit more influential, and with the Fed chairman speaking yesterday, and then we had a couple other Fed officials speaking this morning. And we are moving towards a quiet period, so we're not going to hear too much from the Fed moving forward as we get closer to the announcement here in about a week and a half as far as policy moving forward. But with that, I think that's why we're seeing a little bit of hesitation here in the markets today. Now, looking at the yield, the 10-year yield is up 1 basis point currently to 419 basis points, and the yield curve is flattening slightly today as we're seeing the front end of the curve sell off a little bit more. Yields on the 1s, 2s, and 3s up anywhere from 2 to 3 basis points, with the back end, at least the 10-year, up about 1 basis point today. And again, it does feel as though the market's kind of waiting or biding its time in anticipation of that non-farm payrolls report tomorrow before we see any other price action. But overall, heading into this release, we are nearing the top end of the range for the last month and a half before this announcement tomorrow.